Hey, this is Travis Anderson with Keller Williams Realty, and in this video, we're going to talk about refinancing. Hey, listen, it's Travis Anderson here with Keller Williams, and in this video, we're going to talk about the three most important things you should consider when you're doing a refinance. Mortgage companies and title companies are swamped right now. You've heard the interest rates are at an all-time low. Well, they've been at an all-time low for probably 24 months, and then they keep trickling down, and they really have been at all-time low in the last few months. But let's talk about things that are important. So number one, of course, is the interest rate. Now, when you're looking at the interest rate online, my advice is to just Google search what the low interest rates are, what the interest rates are for mortgages. And it'll show you Wells Fargo, Bankrate.com, Bank of America. They're gonna quote you what the current interest rates are, and they're gonna have it amortized over 15 years or 30 years or whatever it might be. What I want you to keep in mind is the rate that they're disclosing is usually the lowest possible rate that you could get at that moment in time. So there are so many factors to your getting a mortgage rate that what they're quoting might not be the rate that you get. So it's important to understand, number one, yes, you should go online first to kind of get an idea of what the rates are. Then the second thing you need to do is you're going to have to fill out an application with a mortgage servicer, with a loan originator, somebody who's going to provide you with a quote of an interest rate. So it's a good idea to start online, but if you're going to take that step to know exactly what your interest rate is, you're going to have to call a mortgage company. Second thing I wanted to talk about is how do you shop for a mortgage company? Because you're going to get a rate that's quoted to you, but there's going to be a cost associated with obtaining that mortgage, okay? Now, obviously the rate is important, but there is a tool for you to know how much money you're spending to get that rate, and that is called the APR. In other words, it's your annual percentage rate. Now, how we calculate the APR is you take the cost of the mortgage plus the interest of the mortgage, and you combine the two together. And then they put that into a percentage rate. So if the interest rate quoted to you is 3.25, your APR might be 3.875. That's your interest rate of 3.25 plus the difference to get to the 3.875, okay? Which would be the cost to obtain the mortgage. The reason it's important to understand APR is when you're shopping a mortgage company, you're gonna want them to give you both of those numbers. I want the interest rate and I want your APR. And then you take those to the next mortgage company and you ask for the same thing. I want your interest rate and I want your APR. And then assuming that they're quoting you the same product, in other words, conventional financing versus FHA financing versus VA financing, which is all meant for a different video, but assuming that they're quoting you the same product, one of them is going to have either a better interest rate or a better APR. And then you'll know. That's how you can shop mortgage companies. Not only looking at the interest rate, but looking at the APR. You know, I met with a client here not that long ago. We sold their townhome in Invergrove Heights. And they are veterans, and what happened is they had refinanced earlier this year. And sure enough, when I got a hold of their documents, the mortgage company gouged them. The annual percentage rate was drastically higher than it should have been. And so it's very, very important that even if you're getting quoted a really good rate, it's important for you to also check that APR, the annual percentage rate, to make sure you're not overpaying for something that you could possibly get for less money. So if the interest rate's important and the cost of the interest rate is secondarily important, or the APR, the third thing that I think people neglect to look at is the amortization. The amortization is the length of time it takes to pay off your mortgage. So if you get a 30-year mortgage, then your amortization is 30 years. You can amortize, most mortgage companies will allow you to amortize your mortgage over 25 years or 20 years or 15 years or 18 years or 22 years. Most mortgage companies will actually allow you to do an amortization that's less than 30 years. Here's why this is important. If you've been in your home and you've been paying your mortgage for, let's say, 3 years, your current amortization of your current mortgage is 27 years. If you refinance to a 30-year mortgage, you've lost the 3 years of time. Now, it would take me a long time to go through a spreadsheet to explain to you how this may or may not benefit you, we can analyze this for you. In fact, we just did this for a customer. They have a 4.25% interest rate, and they could get their interest rate down to 3.5 or even 3.25. But when we analyzed the amortization, it would cost them more money over the next 5 or 10 years than if they would just keep the higher interest rate. I want you to really hear that. Sometimes, even if you keep your higher interest rate, it's a better deal for you. It's a better deal for you. So be sure not only to shop the interest rate, to look at the APR, but also to look at the amortization to make sure that you're not taking a worse deal even if you get a lower interest rate. And if you'd like me to analyze this for you, feel free to reach out to me, shoot me an email. I'm happy to do it. Now, the last thing I want to talk about, it's number 4. I said it's a 3-part video, but just some other things to consider. We need to make sure that your home will appraise so that you can refinance. Now, the market's been really good over the last couple of years, so if you've had your current mortgage for 2 years or 3 years, you're probably going to be okay. But it's worth exploring if it is going to make sense, because an appraisal is going to cost you $450, $550. So let's make sure that your home would, in theory, appraise before you spend the money. Another thing to consider is your escrows. So escrows are your taxes and insurance. So if currently you're paying $2,000 to your mortgage and maybe $500 is going to your insurance and your taxes, when you do a refinance, that money that's sitting there is going to get refunded back to you, and you have to start a whole new escrow account. So keep in mind that sometimes you have a cost to obtain a mortgage, but some of the other dollars and cents that leave your pocket that aren't a cost, at least right now, is starting that escrow account new. Something to consider, something to look at. It isn't anything that would cause me not to refinance, but you might have to come out of pocket with $3,000, $5,000, $6,000 extra in order to get your mortgage started, and then you'll get some money refunded. So what we don't like to see people do is increase their mortgage amount, buy those escrows, right? And then get the refund and then not apply that back towards their mortgage. Okay? You're just doing yourself a disservice. Again, it might be a worse deal for you to refinance, even if the interest rate is lower, and escrows is a part of that conversation. I've said it already here, but it probably makes sense to say it again. If you're going to refinance, make sure you're checking the interest rate, make sure you're checking the amortization, and make sure you're reviewing the amortization to make sure that it's actually a deal for you. And just because it's a lower interest rate does not mean it's a deal. That is not true. There is a reason that mortgage companies want you to refinance. Mortgage companies want the additional interest coming into them. Even though it's a lesser rate, it might be a better deal for the mortgage company. So you really need to make sure you're analyzing those top 3 things, and then keep in mind the appraisal and keep in mind that your escrows are going to matter. Again, this is Travis Anderson with Keller Williams Realty. We help you sell your home fast and for more cash, and we help analyze mortgages. Give us a call if you have any questions.